And this is how your Wednesday business day starting off here on Channels Television. Welcome to Business Morning. I am Boostin Amafa. It's good to be back with you again. Let's get to the show. Started. The first Monetary Policy Committee meeting of 2019 by the Central Bank of Nigeria highlights the state of the economy and the markets. The MPC says they're pleased with the increase in credit to the private sector, but a few issues were also highlighted. The Monetary Policy Committee talked about the declining banks' non-performing loans on the back of the federal government paying contractors their arrears, and that is helping the bank's balance sheet coming up a little bit nicer than they used to be. That's good news. Put that in your box. But I also noted the gradual GDP growth for most part of 2018. That's a bit of a look back into the year we just finished, of course, the first meeting of the new year. However, the 11-member committee warns of foreign debts returning to pre-2019 Paris Club levels. Remember those days? Yes. Yesterday we got a warning that the authorities, the fiscal authorities, should watch the level of the country's foreign debt. Meantime, the outlook of the Nigerian Central Bank on oil prices for 2019 is $50 per barrel. The MPC also advised the government to improve security and warns of low oil prices, disruption to food chain due to insecurity, and political crisis as part of the headwinds to look out for in the new year. The Central Bank monetary policy body says inflation outlook will be mixed, but will likely see a decline in inflation headline figures later in 2019. Meantime, Buhari's administration has conducted its first port concession with the handing over of the Warri Port Terminal 2 facility on Tuesday to Ocean and Cargo Terminal Services. That's a $100.78 million deal concession that will modernize the port facility, reduce the cost of shipping and cargo clearing, and relieves the federal government of financing the ports. The Director General of the Agency for Privatization, called the BP, Alex Oko, says the concession of the seaports in Nigeria since 2005 represents one of the success stories of the privatization and commercialization program in Nigeria. And all that took place in Abuja yesterday. And the third was the big story around the Companies and Allied Matters Act, which passed the third reading at the House of Representatives. The bill had already been passed by the upper legislative house, or what you call the Senate, in 2018. According to the Office of the Special Advisor to the President on Trade and Investment, Dr. Jumoke, she says that the third reading of the Companies and Allied Matters Act at the House of Reps represents the boldest reform in Nigeria's corporate environment in almost 30 years. If you know the history of Kama, I'm sure you'll agree with her. And let's take this to the market. Of course, quite a number of issues are happening live here in the studios at our global headquarters. Is Robert today, who is the head of research at Afrinvest. Good morning. It's good to have you.
Thank you.
First time in the new year. Let's have this handshake. We'll talk about your new partnership with the Nigerian Stock Exchange with those two new equity indices. I'm interested in those things. Then, of course, you'll take us through what you think the readings will be for the market as far as the MPC is concerned. But first, this is what they call the morning after. But first, let's take a look back at the day the MPC was meeting and how the markets actually performed. Let's get a review of that. Temple Ashaju, our business correspondent, is live to us from the Nigerian Stock Exchange studios in downtown Lagos. Temple, good morning. Welcome to the program. So, yes, that was a soft landing at the equities market yesterday. Throw us the numbers, would you?
Right, Bolton. Market was marginally down yesterday. Some people want to describe that as a flat performance, basically up some 0.01%, but still at the 30,000 psychological level. The equity capitalization was able to add some 1.55 billion naira yesterday, and it closed at 11.462 trillion naira. And if you look at the activity level, we saw a decline in volume of transaction, and of course, decline in the value of transaction. Decline in volume by some 51%, and of course, the value that came in at 2.44 billion naira was a decline of 56%. We saw all that's transpiring in some 3,320 deals, basically. Top trades was a Diamond Bank. We saw some 71 million units of its shares yesterday traded, valued at about 150 million naira yesterday on the floor of the Nigerian Stock Exchange, albeit the fact that Access Bank is now changing the date of its extraordinary general meeting that is supposed to be for the 1st of February 2019. But if you take this now further to the sectoral performances, we saw that 3 of the key sectors yesterday ended in declines. That includes the consumer goods segment on account of the losses we saw on Nigerian breweries, and of course industrial goods segment of the market, which had some losses in CCNN by 7.06%, and that impacted the sector, ending at some 245 basis points negative. Now, the insurance segment of the market was also down some 0.41% on account of some losses that we saw on WAPIC Insurance, which sheds 4.76%, and of course Sovereign Trust Insurance that seemed to be disappointing some investors. Now it closed downwards some 8.33%. But if you look at the banking segment, because a lot of the losses in the banking segment have bottomed out, and they saw a lot of re-entry there yesterday. Guarantee Trust Bank rose 1.3%. Zenith Bank also rose some 1.4%. Fidelity Bank rose, and a whole lot of other companies that have financial services firms under that sector, rose yesterday. Oil and gas ended positive 1.68% because we saw gains in O&O, which rose 6.82%, and of course Seplat, we did some 1.9%. Generally, we saw gains in the market, buying sentiment increased, but we also saw a bit of profit taking, and that's why the market breadth yesterday was a bit positive. 26 stocks appreciated, with Linkage Assurance gaining more, and of course 10 others depreciated, with MC Nichols being the topmost loser there. But in terms of the energy segment of the market, we didn't really have much activities except for the performance we saw on O&O and Seplat, which were the 2 key stocks that rose in that segment and was able to push up the indices of that market. Unlisted securities market yesterday saw a bit of profits taken and was down some 0.13%. The USI closed at 749.31. We saw market capitalization closing at 538.33 billion naira, and of course volume was just 437,864 units, valued at 11.50 million naira. And of course, the deals basically for yesterday was just 8. But if we take this further to the debt market, where we had bonds yesterday, the proceedings was a bit mixed with some kind of bullish tilt. We saw average yield shedding 1 basis point to 15.18%, and we saw demand across the mid and the long end of the curve. At the medium end of the curve, we saw a decline by 6 basis points, and of course the long end 6 basis points as well. We saw interest on the March 2024 security, thereby seeing some contraction of 15 basis points, and of course the April 2037 security that experienced some 20 basis points contraction as well. Now, yield at the short end of the curve continued to widen. We saw it rising by some 10 basis points because investors didn't really show much interest in that, and there was a bit of sell-off on the June 2019 security, which is at the short end of the curve. That narrowed by some 36 basis points. But on the other side of the market, where you have treasury bills, we got inflows of some 38.2 billion naira yesterday from the coupon payments that we saw on the January 2026 security, and that now gave some moderation to the side of the market there, to the yield curve there, where we saw 3 basis points on the average to some 14.76%.
If we take all that from there into the fixed income space with the FMDQ a bit later. Thank you very much for raising the curtain on the show for us this morning. Of course, you're standing by later in the program to give us what you call the morning after. That's the first trading day after the MPC. But yesterday the market sat on its hands, as it were, the equities market. That was Temple. See you within the hour. Temple Ashaju, our business correspondent, live at the Stock Exchange. Of course, Robert Omo today, live here at our global headquarters here in Lagos. Yes, on Monday, the Nigerian Stock Exchange and AfriInvest, for the first time in the history of the Nigerian Stock Exchange, launched 2 new indices: the NSE AfriInvest Banking Value Index. You can see the you can see that on the NSE if you go there now. Of course, on AfriInvest. Then we have the second, the NSE AfriInvest High Dividend Yield Index. That's your BVI, NSE AFR BVI, and NSE AFR HDYI. So this is something very new when you have a stock exchange, and it's a practice in many parts of the world when stock exchanges partner with specific investment banks and securities trading firms to launch specific indices in the market to help you track the market a little bit better. So that's what you're talking about, Robert. Good morning. Thanks again for coming through.
Thank you.
Take us through why these 2 applicable benchmarks are interest in Nigeria, and of course we know your annual banking index. So it's natural for you guys to do a banking value index.
Yes, essentially yes, because again, you know that we've been here for quite a while. 2018 was 23rd anniversary of AfroInvest. And in 23 years, we've published annual banking sector report for 13 years, and based on our experience, we believe that for most investors who are investing within the banking space, they target value, right? So we decided to screen based on the criteria for value, which I will roll out in the course of this interview. Again, by value, we're referring to investment in specific banking stocks, that will give more than, what investors are likely to get. If you invest in
all the listed banks in this index?
Definitely not.
Why?
Because not all the listed banks currently trading on the NSE, are considered value stocks.
Okay, so let's talk about the value stocks. Who and who? All the tier one folks, yes.
So what we've done, was to, this index dates as far back as 2013. I mean, if you
look at the
basis, yes, that's so. When you look at the historical trend over the last 6 to 7 years, looking at 2013, what we studied was to say which stocks have investors historically invested in on the basis of their fundamental criteria
in the banking sector.
In the banking sector, and we found out that most investors target banks that have very high return on equity. So our criterion for that was to look at the last 8 quarters, so if you're, the last 16 quarters, so if you're a bank that has historically returned above industry average ROE, which is return on equity, in at least 8 out of 16 quarters, then you qualify to be in that index, but that's one of the several other criteria that we consider.
Capitalization?
Capitalization is part of it, but again, speaking to fundamental value, we also look at some market pricing metrics that some investors want to look at, apart from ROE. So in our methodology, if
price to earnings?
Yes, if you pass the test of market pricing, so we use basically 3 metrics. We're looking at book value to price yield. That's the flip of price to book. We're looking at the earnings yield, and we're looking at the dividend yield. Again, you must have consistently performed above industry average in at least 8 of the last 16 quarters, right? So on that, we now screen further by looking at the liquidity, because you can't buy into these banks if they are not as liquid, right? So our test for liquidity was average traded value ratio, meaning we're just looking at the average monthly traded value over the last 12 months.
And the available float?
Yeah, of course. That's the basis for market capitalization. So you must pass the test of at least above 2.5% market capital, free float market capitalization when you look at the universe that you're screening. And we backtested to see how these have performed over the years. Remember, I said this since 2013, and between 2013 till date, it was only in 2015 that the benchmark NSE index for the banking sector had outperformed our index. So that gives us confidence that the methodology is right.
How many banks are in this index?
So by methodology, you cannot have less than 5 banks, in the index, but you can have as many as qualified. As many as qualified.
So how many?
Yes, currently we have about 5 banks.
5 banks.
5 policy banks
in this index. And they are. Let's just go for full disclosure.
Okay.
Yes.
So the banks that we have here are pretty much Access Bank. We have Zenith Bank. We have Guarantee. We have Stanbic, and then we have UBA.
Okay, great. Currently, so let's talk about the AfroInvest High Dividend Yield Index.
So the high dividend yield, Nigerian investors are also known to be income investors, meaning that they target when banks, or not just banks, the entire securities listed, that's our universe, they are much more interested in companies that pay dividend, not just consistency in dividend payment, but companies that offer high dividend yield, which was why the index was named High Dividend Yield Index.
So my dividend policy comes into play here.
Exactly.
And how much of my profit?
So again, we look at a 6-year period, and we're saying that if you are a company that has paid dividend at least in 4 of the last 6 financial years, then you qualify to be in that index. Not only that, you must have made positive earnings in the last in 4 out of the last 6 years, as well. And then your dividend payment must have outperformed the market in at least 4 of the last 6 years. So these are conditions that we use to screen the securities. Again, when you back test, all other metrics like liquidity and market capitalization also come into place. When you back test, we found out that this particular index has behaved in line with the market. So a year the market is bullish, it will outperform the market. But again, any year market is not as positive, it also underperforms the market.
Okay, great. So we'll be tracking these two new NSE Afro Investor Index, the banking and the dividend, high dividend yield index. But again, the big story yesterday, I'm sure which all of you research analysts focused on a lot more, was the MPC. How do we treat these first MPC decisions of 2019?
Well, it's in line with expectation. We had expected that the Monetary Policy Committee will move in that line. There are metrics to be looked at, for taking that decision. And the market was not disappointed at all that the MPC voted for retaining all policy parameters, retaining MPR at 14%. Again, it has been argued that even if the committee had signaled, reduction was not in the was not part of the constitution. It wasn't on the table at all.
So is it a hike or a hold?
Is that a hike or a hold? But again, already the central bank, which normally will carry out the mandate of monetary policy committee decisions, they've stuck to a guidance towards increase in the short-term market rate. For OMO, for example, we are seeing discount rate for the long-dated bills 364 at 15%. That implies above 17% yield that investors will get if you plug in for the next 364 days. Now, what this signals is that even with a hike, or with a hold or a reduction, the market rate still continues to guide. If you like, the MPR is currently at 15%, even though it's at 14%, because most investment will now target what the risk-free is offering, which is treasury bills, and the OMO rate, which currently at 15%. So there was no need, for instance, if there had been a reduction, it would have been antithetical to what the policy objective is, because market is already moving.
Yes, since the last meeting, in fact, since most of last year, the central bank was already moving in that direction.
Exactly.
Whatever the MPC decisions were, it keeps going in line, trying to align with what the MPC is doing at the fixed income market, in particular the treasury offerings.
Absolutely. And again, this has spoken to the consistency of the committee, and then what we saw yesterday was an alignment between what the MPC is doing and what the central bank, which is the bank, is doing.
Great. For fixed income. So how do you think the equities play should be for this MPC decision, since the treasuries have a kind of idea where they're going?
Sadly, the market is already tilting towards the fixed income market. So most investors, would like to play in that window, because there are so many other issues that are sort of boxing the equities market. Election concerns is one of it. The central bank alluded to it. The governor alluded to it yesterday, that we've seen some FPI inflow regardless of the so-called risk concerns, political risk in the horizon. But again, most of these funds inflow, they've not been targeting the equity segment of the market, which is why you've seen this sort of performance. It's also noteworthy that we've seen, in the last 7 trading days, we've seen, first we saw 6 consecutive days of positive gains, before we saw a loss on Monday, and again on Monday, and then yesterday again, the market was down. So we do not expect that there will be there's no major trigger, so to speak, that will drive the market before the elections are over. We are very hopeful. We are hopeful.
Either upside or downside.
So
we just cruise along.
So what we're seeing right now are investors trying to spot opportunities. Again, do not forget that fundamentals are still right, albeit sort of moderate.
So just take your stock picks.
Exactly. So they are taking decisions based on market readings. They are not so aggressively going long on any securities, and that's why you're seeing these pockets of gains and losses that the market is returning. But we see how that play out after the election.
We'll return to you in days and weeks ahead. Thanks for coming
Thank
through.
You. Thank you.
Robert Omotode, the head of our research at Afro University. Let's come back after the break, of course, to remind you a few of the decisions yesterday. In case you missed that at lunchtime yesterday, or a little after lunchtime, when the Central Bank Governor Godwin Emefiele read the MPC decisions, we'll try to recap that for you. Then, of course, the second biggest story on the business side from Abuja, Nigeria's political capital. All that in part 2 of Your Business Morning.